Hello, everyone. So Enphase just reported their earnings and the stock is down about 8% after hours. Enphase, they beat third quarter estimates as revenue from the US increased 29% compared to the second quarter. It posted an adjusted profit of 90 cents per share of the quarter ended in September 30th, compared with estimates of 65 cents. Now, Enphase has been one of my worst investment as I lost 40%. In reality, I lost about 70% as I put $5,000 initially, and currently it's worth $1,500. This is a really bad situation to be in. In this video, I'm going to share my thoughts on what I plan to do with my investment. Please note this is not financial advice. I'm not qualified to give financial advice. I'm simply recording my thoughts about Enphase. As you know, I do own $1,500 worth of Enphase, which is down from $5,000 of my initial investment. Don't forget to smash that like button, subscribe to the channel, and let's continue growing together. Now, Enphase dropped due to its guidance. They now expect Q4 revenue to be between $310 to $350 million. This is well below analyst expectation of $383 million. In addition, Enphase is saying tariffs are hitting their margins by almost 5%. It expects fourth quarter gross margin of between 42 and 45%. Now let us look at the latest income statement to get an idea on where they're at. The latest revenue is $410 million. Gross margin is at 48%, and this is expected to drop next quarter to 43%. Operating margins are at 15%, which indicates this company is profitable. They're continuing to streamline operation to get the cost low. Enphase has over $1 billion of cash and cash equivalents. They're buying back stock, which is why their latest share count is 130 million. Now I will show you the valuation. Currently, they're making $1.4 billion of revenue annually. As we all know, they used to be close to $2.8 billion a few years ago. But high interest rates, solar credit cuts by government, tariffs, and higher competition affected Enphase growth. Currently, they're able to make $1.4 billion with all of these headwinds. But high interest rates are going to go lower in the coming years. So I anticipated that there will be a lot of more cuts in 2024 and 2025, and that did not work out. I am not anticipating there will be favorable interest rates by late 2027. Tariffs-related adjustment should also stabilize by then. So in such case, Enphase can get back to $2.5 billion in revenue from the current $1.4 billion. I am anticipating 17.5% net margin on the slightly optimistic side, as Enphase is making a lot of changes to their expenses. I am applying 30 multiple and 120 million shares, which assumes 10 million share buyback. Now, with all of this, their share price would be $110, and this will recover my investment. Now, personally, I am disappointed with this pick, but I am still holding and I'm not ready to sell. Competition and lack of EV credits are not in Enphase control, but there are still tailwinds to look forward to, such as lower interest rates and increased affordability of solar. So as of right now, I am holding patiently. Let me know what's your cost basis on Enphase and how many shares and percentage of your portfolio does Enphase has, and hopefully we will all recover soon. Thank you so much for watching, and see you in the next video.